Now, at this point, you guys may or may not have heard of the new law that will have some pretty severe tax implications for people that are conducting business on platforms like Cash App, Venmo, or PayPal. And if you don't know what's going on, let me take like 15 seconds and bring you up to speed. Last year, whenever the American Rescue Plan was passed, in that bill, there was a new tax law that had implications specifically for these three platforms. Basically, what it means is that if you're somebody that has $600 or more worth of business transactions on these platforms, then these platforms will have to report that income to the IRS. So with the fact that tax season is in full swing and we are nearing the second quarter of 2022, I thought that today's video would be a perfect time to break down this tax law, to go over a few things that you need to know, and of course, to talk about what this tax law is and what this tax law isn't. That way you can be the most prepared that you can possibly be. So let's get started. So let's first talk about what this tax law actually is and what type of impact it will have to gig workers. Because let's face it, there's been a lot of misinformation circulating around online, and I think it's important to get our facts straight. When working on third-party payment processors like Cash App, Venmo, or PayPal, whenever you make money on these platforms, that income isn't automatically sent to the IRS. So let's say, for example, you're flipping furniture as a side hustle and you sell a chair for $200 and that payment is sent to you through PayPal. Well, in this example and in millions of other examples out there, this income wouldn't necessarily be reported to the IRS unless you were the one to report it on your taxes. This is because third-party payment processors have a threshold that you typically must meet in order to have that income reported to the IRS. Historically speaking, and up until 2022, that threshold was $20,000 in 200 transactions. So until you had 200 transactions and $20,000 worth of sales, that income and these transactions would not be reported to the IRS by these third-party platforms. So for example, if you were to make $10,000 in sales with your side hustle through Venmo, and that was through 100 different transactions, Venmo would not let the IRS know that you were conducting this business. It would be up to you to let the IRS know through your reporting in your tax return. But if you do meet the threshold, then at that point you would be issued a 1099-K by that payment processor, and at that point in time, the IRS would know all of your dirty secrets.
I am never going to financially recover from this.
But unfortunately, this all changed this year because in 2022, a new law went into effect, and instead of having a 20,200 transaction threshold, the new threshold is only $600. Yes, $600. So if you're somebody that conducts business and you have $600 worth of sales, you will now be issued a 1099-K, and that will notify the IRS as to what you're doing. Now, this is pretty substantial, and it could have some pretty severe impact and severe consequences to the gig economy. So much so, eBay has started lobbying to the federal government in hopes of trying to get this threshold lowered to what it was previously. So now that we know what this tax law is and we know roughly what it entails, now let's dive into some of the key things that you should know and be aware of. And then after that, we'll dive into how you can prepare yourself and how you can set yourself up for success come next year's tax season. Now, first and foremost, it's important to note the fact that this is not the federal government's way of trying to tax you on your personal funds that you're transferring between friends, roommates, or family members. If you're somebody that uses any of these three platforms for personal use to pay for bills, to do Uber transfers, to pay for food or drinks, you can still do that, and there will be no extra tax implications to those funds. So really, a good rule of thumb to use is that if you're using any of these platforms for personal use and personal use only, then you have nothing to worry about here. And really, the other thing that I have to mention is the fact that in execution, this new law doesn't change a whole lot. If you were somebody that was selling $10,000, $15,000, $20,000 worth of goods from PayPal, Cash App, or Venmo, then you should have been reporting that income all along. And it's not like the issuing of a 1099-K changes any of that. This is basically just the IRS's way of fact-checking your income, and it makes it harder to evade taxes, but you really should have been paying taxes on any substantial business income that you were making from these three platforms this entire time. So really, this new law shouldn't change a whole lot to your business or to your taxes if you've been running your business properly. Really, I think what it will add is some extra administration work whenever it comes to filing your taxes, taxes, but there shouldn't be any big surprises if you've been conducting your business properly. But there are definitely some major downsides here that are going to have some negative effects to the gig economy. And some two major concerns that gig workers have been expressing is number one, the implications that this could have to brand new gig workers. Like I mentioned earlier, if you're running a business that is a side gig or you're running a business through any of these three platforms, you should have been filing your taxes on that income this entire time. But if you're somebody that is brand new to the gig economy and you're brand new to using Venmo, Cash App, or PayPal for business use, then the daunting task of having to report that income whenever you're first starting out could potentially be something that could deter you from starting at all. I do think that this could have a pretty severe impact on those smaller gig workers that are doing gig work on the side on a very casual basis. And I think the daunting task of filing your taxes for this gig work could be something to deter people from starting at all. But another concern for more established gig workers have been the fear of getting double taxed. Because of the fact that 1099Ks are going to be issued so early on in the year, especially with these resellers making a lot of money, there is the concern of either A, making taxes more complex and more convoluted, which nobody wants that, or number two, the issue of being double taxed because of the fact that your taxes weren't organized correctly, they weren't reported correctly, or there was simply a minor mistake causing this issue. And I do think that this is a valid concern, but I do have some tips and tricks that you can use in order to avoid this problem altogether. And that brings us to the final topic of this video, which is how you can prepare for this tax law and how you can make sure that you're setting yourself up for success even though your taxes next year may be a little bit more confusing. Number one is set up a separate Venmo, Cash App, or PayPal for your business. You should not be using the same PayPal account for your business as you are for personal use, and same goes for Venmo and Cash App. If you have a business and if you're conducting a business, everything needs to be 100% separate. A different bank account, a different Cash App, a different Venmo. You need to keep everything as separate as possible. That way, if you have a 1099K that gets issued, it's not mixing and melding the different transactions that you're conducting for personal and business use. That will cause your taxes to be very, very confusing, and that is where there is a ton of room for error. If you separate your Venmo, Cash App, and PayPal accounts, that will minimize the potential for error a significant amount. Next is to sign up for services like QuickBooks, or if you're wanting to find a free option, Mint.com is a really good alternative. It's free. It's targeted more towards personal use, but if you have a small side hustle, it is completely sufficient enough. This is a really great way for you to track your transactions and to figure out where your money's coming from, how it was distributed to you, and it's a great way to keep things organized. I used to be a huge proponent of using like the old school Excel documentation for my own books, and recently in the last couple of years, I've switched to QuickBooks, and the change has been absolutely mind-blowing. I am a huge fan of QuickBooks. It's super affordable, and Mint.com is a great option as well. But once you get started with these bookkeeping services, you will never turn back. It makes your life so much easier. It makes your life so much more organized, and organization is going to be key whenever it comes to tax season. And this will be a huge tool in minimizing your tax bill whenever it comes to these transactions taking place on Cash App, Venmo, and PayPal. And the next and final tip that I have for you is if you're somebody who is brand new to the side hustle or gig economy and you want to use these platforms, my tip for you would be to not use them at the beginning. Maybe find some other more low-key alternatives whenever you're first getting started and whenever you're first dipping your feet into the world of these different side hustles that you want to explore. And then if and only if you decide that you want to move forward in a serious way towards this business or revenue stream, then at that point you can start using Cash App, Venmo, and PayPal. But if you do, I would encourage you to start an LLC. And the same advice goes to anybody that has a side hustle using these platforms and you're not exactly sure what to do from here. If you're somebody who's wanting to use these platforms on a serious basis where you're making more than $600 per year, then starting an LLC will be your friend. The reason is that if you're somebody who is selling a lot of product through these platforms, then you're going to have tax implications that go along with that. And so if you're going to have to pay taxes on this income anyways, you may as well get the tax benefits of having a business and deduct things like your phone bill, your internet bill, your computer, your time, the supplies that you use use to flip these products. It's a great way for you to minimize that tax bill once it's given to you by the IRS. If you're somebody who wants to start a side hustle and you want to get serious about it, I would encourage you to start an LLC. But I don't encourage you to start one prematurely, because there's nothing worse than having an LLC that you never used and then you have to go through the trouble of filing taxes for that LLC, closing the LLC. It is personally a mess. So if you're somebody that's just wanting to experiment, then maybe look at doing cash deals, maybe look at minimizing your transactions on these platforms to under $600 until you know whether or not you want to take this side hustle seriously. And at that point, I would encourage you to form an LLC. And a bonus piece of advice that, to be honest, I just thought of as I was filming this video: find a good accountant that understands how you make your money, where it's coming from, and the different tax implications of these revenue streams. This is something that has really resonated with me over last year because of the fact that I've always made my money in non-traditional ways, making money through YouTube, through Turo, through the gig economy. I've never had a proper W-2. And I've learned from experience that going with a traditional accountant for non-traditional revenue streams is quite honestly a recipe for disaster. It makes it so that you spend a ton of time educating your accountant on how you make your money rather than them educating you how you can better plan your business for tax purposes. So for me, over the last year, I've switched to an accountant that understands Turo, that understands the gig economy, and understands all of the tax implications that come along with these businesses. And it has been a huge game changer. So if you can find an accountant that's familiar with whatever you're doing for your revenue, however you're getting your payments, whatever types of businesses you're conducting, this is going to be a huge game changer whenever it comes tax season. So if you can find an accountant that understands the businesses that you conduct, where you make your money, how you make it, this will be a game changer whenever it comes to getting that tax bill during tax season. But like always, you guys, I hope that you enjoyed this video, and I hope it gave you valuable insight into how you can prepare and how you can plan for this new tax bill that is currently in effect. Obviously, this isn't great news, and it's always better to have less paperwork, but to be honest, I don't think that this is a huge game changer, and I don't think it has the tax implications that some clickbait articles would like for you to believe. If you guys have any questions, comments, if you have anything to add, I would love to hear it. So make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit the subscribe button, and hit the notification bell. And I will see you guys in the next video.